All right, if you want to ask questions, you can go and um, if you want to ask questions, you can go down to the two individual user. You choose my name and you type. Can you see that? So that's how you will ask questions as we go along today. Okay, wonderful. Welcome, everyone. Today we're going to talk about trading, and some of you are trading, but some of you are not trading, and you're thinking about trading. It's time to get serious about this, even if you're already trading, and start doing it, get serious about it, and really change your life. You know, a lot of people are juggling a lot of things nowadays. They're working full-time, they're working part-time. So the reality is that sometimes you have to find a way to manage your schedule to be able to transition if trading is something that you really, really, really want to do. You have to find a way to actually make it work, okay? Because again, you know, we're never going to have the perfect time where we have all this free time and all the money in the world to change careers or do something. You know, you have to just say, this is really important. I want to do it. I want to do this. I don't want to change my life. And then you just jump into it. Again, this is me. If anyone has any questions, you can reach out to me. You can call me at 929-3200-GAP. You can email me at melissa@thestockswoosh.com. You can follow me on social media. Probably the best place to follow me is YouTube because I have a lot of videos on YouTube. But again, here we are. It's 2025. It's almost March. I'm actually shocked about that when I think about it because we're 2 weeks away from March. And I feel like we just got over Christmas. But it is still early enough in the year that you can start trading, okay, and actually move forward, and poof, you know, by the summer, fall 2025, you'll be where you want to be. You'll be at that point where you can achieve your goals, okay? So I think it's really, really important for you to set goals as early as in the year as possible if you want to achieve them by the end of the year. And I got to tell you, you know, this year has been tricky. I actually just sent out an email to everybody today where I said, you know what? You know, we could be more active actually than we are since the start of the year. But I'm almost tippy-toeing into the year. Really tippy-toeing into 2025. The market's been choppy. And you saw that really today. But I think it's important to have goals, set the goals, and put a date on those goals and to start achieving them as quickly as possible for yourself by taking the time to really, again, invest in your future. Whether you want to trade part-time or full-time, that's really up to you. Some people have jobs and they love their jobs, but they still want to make extra money on the side. They're not looking to trade as a career. That's fine. Then there's some people that are retired, and because of inflation and other things, they can't afford to live just on their retirement anymore. So they want extra money coming in. And again, trading is a good way to do it if you learn what to do because you can do it from home, which is nice. And it's really part-time hours the way that I trade. Now, I've continued to put in here the stats for last year because it was an entire calendar year. So I have the stats for the day trading room from 2024 in here. Every trade in here, okay, these stats in the room that I trade in every day is a day trade room. That means you have to have a margin account to take the trades. Now, there are some people, Kathy, I see you here, who are doing the trades as options. So that's up to you. But when I'm showing you my results, they're day trades where you have to take the trade on margin. So the stats for 2024, again, were really good. We were at 69% win ratio total for the end of the year, 288 trades total, 194 winners, 89 losers, and 5 break-evens. Again, this is whether you risked what I risked or not. So again, going back to the results, on my risk per trade was around $3,500 per trade, okay? And I'm considering bumping that up for this year, but I haven't done it yet. Now, if you just want to do options, these are the stats for the newsletter. I have a newsletter. You can join the newsletter. There's no prerequisites for the newsletter. I risk more, okay, so I'm risking an average of around $8,000 per trade in the newsletter. Again, whether you have a big account or a small account depends on how much you can risk, but the win ratio for the year was 70% for this entire year, okay? So again, this means for every 10 trades, you figure 3 are going to lose, 7 are going to work with me, okay? Again, this is a newsletter where the trades get emailed to you. These are options. I do not have an option room. So the total results for last year for 2024 was over 4.7 million. Now you would have had to risk the amount that I just reviewed. Now let's talk about 2025. I do have the stats in here for 2025. I don't have Friday's trade or today's trade, but through Thursday, the 13th, up 158,884 for the year in the room, and our stats are, so far year to date, again, I'm pretty consistent, 69% win ratio. This is the room trades. Then I have the options results. Again, I'm risking an average of $8,000 per trade, up 221,600 for the year. And again, this isn't updated through last week either, but 72% win ratio. Again, I'm pretty consistent with my system. I say around 70%. Could be a little bit more than that, could be a little bit less than that, depending on where we're at in the month, okay? So whether you want to take 1 contract or 10 contracts or 100 contracts, it has to do with the size of your account. I tell people when they start out with me and they're new, they should start out slow. I just think people should do that because they don't know what they're doing yet until they learn the system. So again, so far year to date, this isn't updated through the last few days. Like I said, 380,484. And so far I'm risking the same in my trades. I have not bumped up my risk for this year yet. And I don't think that's a good idea right now, the way things are with the market. Okay, now, what do I do and how do I do it? I have a method where I'm trading, okay? Get up in the morning, I go through the same thing every day. I get up and I rate the gap. I scan, rate gaps, and if it rates 20 points or more, I take it in the direction of the gap. I prefer to short. So most of the trades that I showed you that were from the day trades are shorts. If I don't find a good short, I'll go long. I'm always trying to find the best gap. In the options newsletter, we do a mix of calls and puts, okay? Now, that being said, the class I teach once a month, the rating system is always the bearish class. Why? Because we mostly short. And I don't have a lot of interest in the bullish class, even though sometimes I do that class. I don't have a date scheduled for that yet. One of the things I found with people when they're trying to trade and they're trying to figure out what to do and they don't know what to trade every day is they're all over the place with too many things. The one thing that you will get from me, if you decide to take my class, is you will get a blueprint of something that you can use every day to find the best stock to trade. You only really need 1 trade a day to make money. That's it. In fact, you could take 1 trade, and if you don't even want to do a retake in it, sometimes they'll do a second trade or whatever. You don't even have to do that. You're going to have less losses if you take less trades. You're going to have more profits if you take less trades too, because you're going to keep the profits because you're going to not have as many losers. You follow me? So a lot of times people think they have to trade all day to make XYZ amount of money. No, you make more money over time as you add to the position with size, not by doing 10 million things trading all day from 9:30 to 4, okay? If I rate, 100 things in the morning, which would be a lot, but if I would, the chances of there being a lot of them that rate good are low. Most days, there's not a lot of things that actually rate well, okay? But every single time I'm looking to do a trade, I'm looking for a gap, and I'm basically trading the momentum. And again, this sounds silly, but it's actually very easy when you think about it. How do you make money going long? The stock has to go up. How do you make money shorting? Well, the stock has to fall. That's the momentum that's happening in it. And again, this is something that I read in the gap. Now, here was one we did. It's just a good example. Just a good example here, a very clear example here of the PayPal. This was back at the beginning of February. Stock closed up here, 89 and change, gap down, snug as a bug, around 82 and change. This was a short. So we did a day trade and we did a put. So this is what I mean, but I mean momentum, because if you did this here early enough in the day, which we did right out of the gate, and you got out of it at the end of the day, what happened? You made money. You could have taken whatever size you wanted. It was a profitable trade. And this is a big move, even for a stock like PayPal. You see that ever since this has not had any much of a move, and as big as this or even close to the size of this move. So on this particular day, this stock had a $4 plus move. That's a big move. That's what you're looking for. You just find one of those today and you're good, okay? Now, any questions here so far? Everybody with me? Okay. Now here was the option we did in the PayPal. 2-4. So this was the day of the gap. I called the $80 puts. Okay. Expiration date was 2/7. So called it on the Tuesday, expired on the Friday, which was perfectly fine. This was a good trade. It wasn't that expensive. You could have done one. Okay. $1.15 cost, sold at 275, profit was 13,600 with a 97.75 risk. Taking it on the day I did it, getting out the day I did it. Why? It had a big move. Return on investment was 139%. What if you did 10 contracts, risked 1150? Now I'm calling this a beginner risk, but you could, like I said, you could have risked less. Could have done half this. The idea is that it was over 100% return on investment, and you didn't have to have a margin account to do the trade. So again, a lot of people want to do options because they can buy the put and sell it without having to short and borrow the cost of the stock from the broker in the day trade, which again, this was over $82. Now, I personally do both. I like doing both. There's different reasons to do both. But if you don't have a margin account, you can do this if you have an options account set up. Okay? Any questions about this? Any questions from anyone here? So anyways, going back, this is all the same thing here. It's just PayPal. We shorted it and we did the put. But how did I know that that would work? Again, I sent this trade out 45 minutes before the open, 8:44 in the morning, Tuesday. How did I know that trade would go? Because I have a system that I apply and a method that I use every day to rate it. And actually, someone's doing the class this weekend. Let me see if he's here. I don't see him here. He's been following me since I started the stock swoosh. Jeff, yes, you are, but this is a different guy. Servinius. He's watched every video I've ever had on YouTube. I don't know how he had the time to do it, but he finally signed up. He's been following me since the beginning. And the one thing he said to me, which I said, wow, this is interesting. I should use this for marketing because I'm just like doing the same thing all the time. I never realized it, but he just said, you're doing the same thing that you've done for forever. I said, yeah, that's true. So, I mean, again, it's a method that you can use forever. I do the same thing all the time, but it's finding the pick. It's finding the pick. It's finding the one. Okay. So again, it has to do with becoming an expert. You need education for that. And, again, I think something happens. I don't know what the flip is. Like if it's 25, 35, 45, 55, 65. I've taught people of all ages. I've taught the oldest client I ever had, I think, was over 80. The thing is, no matter what your age is, you should never be adverse to learning. We become more intelligent when we learn and we read and we dive into things. So learning should be exciting and fun, not like a bore or a drain. I think because of social media and the 24/7 news world that we live in, which was not the way that life was 20, 30 years ago, actually, our attention spans we can't stay on top of things for too long unless we focus, but you really have to, because that's how you're going to absorb the information, and that's how you're going to learn, and that's how you're going to get to be where you want to be. I have a very different personality. I can zoom in on something and focus on something to the nth degree when I'm in that moment, but then when I take myself out of it, I just want to turn the switch off, where I just want to be like a jelly bean, and I'll just lay on the sofa at night and watch TV. I don't even want to think about anything. You know what I mean? At night, I like to watch fun stuff or whatever, like comedies, mysteries, whatever. I don't want to watch the news at night. I don't want to think at all. But then in the daytime, my brain is on, and it's on level 10. You know what I mean? So, when you're in that mindset, when you're trading and you're focused, all you have to do is be in that mindset for 30 minutes a day. Because I'm really just mainly trading in the open. And again, even if I'm in an option and I'm holding it, I'm not stuck and sitting in my seat staring at it all day. I can tell this is going to go today, or I'm going to have to come back tomorrow. Maybe I'm not going to get out of the PayPal today. But PayPal was one of those ones where I knew I was going to exit it on that particular day. Okay. Any other questions here so far? So it's really about getting good at one thing in life. I put this Seinfeld in here because the 50th anniversary of SNL was on Sunday night. I watched it. I actually stayed up late to watch it, and I was disappointed because it didn't have a lot of the old characters back and sketches back. They had some, but I think they could have had more. But anyways, Jerry Seinfeld was in the audience, and he's become so successful. And I thought to myself, I remember seeing some interviews that he had done a couple years ago, actually now. He really focused on his craft at becoming a comedian, okay? Again, he's a comedian, but he took it so seriously. So you just see him and you say, oh my God, this guy's so funny naturally. But he's really focused and honed in on all of his stand-up, all the jokes, everything he's done. And guess what? He's just enormously successful, so wealthy. It took time. You know, the show was a flop when it first started. I don't know if anybody knew that. And then eventually picked up and it took off. One of the best comedy shows ever. Kramer and George are the best in the show. Yeah. Well, George I'm sure everybody saw George had that Super Bowl commercial, which was kind of funny, but it was kind of weird. I don't know. It was kind of funny and kind of weird at the same time, if anybody saw that. But the point is, he focused on being a comedian. So you could take anything. I don't even care what it is. Like, I've used examples in the past where I've said if you were going to become a surgeon and you're going to become, a heart transplant surgeon. Well, that's it. That's what you do. You don't do every type of transplant. You know what I mean? Like, this is it. You hone in on that. And you go to school for a very long time and you learn how to do it. Like, I've used examples in the past that tend to be more serious, whether it's doctors or accountants or attorneys if you have a specialty. But in reality, anything, any career where you want to be, the top of your game, okay, which he obviously wanted to be, he focused on it and he got really good. And again, he's a comedian, So it could be something serious, which I happen to think trading is serious because you're risking money, or it could be something that is fun, but you have to take it seriously. So anything you do that you want to be good, you have to take it seriously. So let's talk about one of the trades we did here recently. We did Tesla. This is a daily chart of Tesla. We did an option last week. This was a nice trade. It was Tuesday the 11th. Expired on Friday, 8:52 in the morning. I set up the Tesla puts for 3:45. Let's take a look at it. So here we were. Actually, what day was Tuesday? The 11th. Here. Everybody see it? So stock closed here, gap down, fell. So the stock, again, open here and fell. So this is momentum. This is a big move. This is like a $20 move in this fat red bar. And we did a short. Okay, again, a put is a short. Everybody see it? So again, I rated it. I said this is a good gap, and we did it. Okay. So cost was $7. Number of contracts is 13. Risk is 9,100. Sold at 21. Profit 18,200. This is a 200% return on investment. Okay. And again, I did this trade on the 11th. It got out on the 11th. What if you took a smaller amount? 2 contracts, 1,400, profit $2,800. Again, a 200% return on investment. This is huge for somebody with a small account. Like, what if you took 1? You could have made $1,400. You could have risked $700, made $1,400. And you could have done that with, 4 or 5 grand in an account. So I don't get moves like this every day, but we do get moves like this. And I don't know when I'm going to get them myself, but I know when I get them. Okay? So again, this is one way to do it. And what happened here was it was the gap. So take it back. Stock closed here, gap down, open, fell. So it closed here at one price at 4 o'clock, opened the next day at 9:30 at another price, and it fell. So I rated it, and I said, this is going to go. In fact, I sent an email out in the morning before I sent the trade. I said, this is good. And we did it. Okay? And we did a day trade in that too. Any questions? So earnings season is also going on now too. It's the end of earnings season. But we get trades. I get this question a lot. Some trades are earnings trades. Some trades are not earnings trades. That Tesla was not an earnings trade. It wasn't. And again, we get trades for many, many reasons. I think there's going to be a lot of different trades for different reasons because we have a new administration. Some things that are affected by tariffs. Look at all the plane crashes that have been going on lately. There's lots of reasons. News. Things can gap for many, many reasons. But anyways, how do you earn a living trading? If you can do this, this is how you will change the whole structure of your life, because a lot of people are actually in a point where they're still not working from home when they want to be. And now people thought, well, I'll be able to do this, I'll be able to do that. Well, now you have half the people that are working from home where they're making them come back to work, and now people are upset. You know, if you really want to be the person that controls your own destiny, the only way to do that is to work for yourself. And if you're trading, you're basically working for yourself. So again, the time and investment that's put in it to do it is worth it if you can get to that point. You know, I don't know if everyone's heard that voicemail with Jamie Dimon. I think it was last week that came out. And, and everyone was up in arms about it because he wants everyone to come back to work. Well, again, some people are in a situation where they really enjoy working from home, but they're not going to have the opportunity to do that all the time. And then some people could never do it because of the type of job they have. They're on the road, they're a truck driver, deliveries, whatever, and they want to be able to work from home. Or maybe they're doing some type of work where it's really draining and tough on their bodies, physical labor, and they're getting older. And they say, you know what, I don't want to do this for the rest of my life. So there's lots of reasons why people might want to trade and switch their income from whatever they're doing into be able to trading. And again, the nice thing is that you don't have to sit and do this for, 8 to 10 hours a day, like you have to work at some jobs. But number one, you need a winning strategy. You got to learn it first. Number two, you need a supportive mentor, do and follow. So again, I explain everything in the class, but I run the live room. That's the best place for people to come and ask questions of me. And then number three, become an expert in one thing. Implement this strategy, get good, and add size to win, okay? And you add size to win once you have the size of account that you can take the risk, and you add size to win, again, once you know how to do it, okay? Any other questions here so far? How are we doing? Everybody good? Okay, there's Michael. Anyways, how do you make money in the market? You got to get the direction right. How do you do that? Determine who's in control. Again, if you were long Tesla, you would have lost. You had to be short. Show who's in control. There's another one we did. This is Ford. It was the beginning of February. Stock closed here, gap down. Open, rallied, fell. This didn't turn. I made money in this. I wish it wasn't the I did an option and it wasn't the option I thought it would be. Again, it was almost too cheap. But the fact is, you could have done a day trade in this and an option in this, but we got the direction. The direction was down. So again, you have to get the direction right to win. If you get the direction wrong, you lose. A lot of people are trying to scalp it. They're trying to scalp trades. And like, in fact, today, I think people were trying to short the market. They were trying to scalp it at the highs, at the resistance. That was a dumb play. We didn't short the market today. But again, I think a lot of people want to scalp. You can't make a lot of money when you're scalping. The only way you can make a lot of money is if you get a big move. Or you have to put too much risk on. And then again, something goes against you, poof, you have a huge loss when you're scalping. So number one, you need a winning strategy. Mine is golden gaps. What is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Okay? So, again, this is one of the things that I've been talking about since I started here today. A gap is the difference between the close and the open. Nvidia closed here at 4 o'clock. We always have a close at 4 o'clock. Open lower the next day, 9:30. Now, do I always short every gap down? No. That's why I developed the rating system. Do I always go long every gap up? No. Again, that's why I developed the rating system. Here's an example here where the stock gapped up and fell. If you went long here, you lost. Okay. Actually, the next day too, right after that. Here's an example where the stock closed here gap down, and if you shorted it, you lost. It rallied, moved up. So it's not as simple as always taking it the direction of the gap, and you're certainly not always doing it against the direction of the gap. It's not that simple. That's why I developed the rating system. So I developed my system. I called it the golden gap because it's like finding gold in the market. A golden gap is a gap that rates 20 points or more per the golden gap 26-point rating system. You can take the trade in the direction of the gap. You can do the trade as a day trade or an option, okay? So you need a focus, and my focus is gaps and shorting. So the reality is that I do go long, but I prefer to short. Why? Because stocks fall faster than they rally. Stock closed here, gap down, and here it is. It fell. Okay? So again, close at 4, open at 9:30. Make sense? So what do? I rate gaps with a 26-point checklist. And again, very important to go through and don't skip it and to do the work, because the rating system helps me determine who's in control. It's not what so-and-so says on TV, what so-and-so analyst says. If the earnings are good or they're bad, we'll short things sometimes when the earnings are good. If you're looking for, hints or clues like that, it's not going to help you. It's really just about the chart. So again, it's all about the gap. Gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power money will flow to pay you. So again, it's about reading the footprints of institutional money in the market. If I see Tesla's going to fall, how does it happen? I forget the price point, because you just saw it in Ford. It was really, really cheap. Same thing, Ford too. It got dumped, okay? Institutional money dumped it. How does something move up? Okay, we did, Netflix was a recent long we did this year that just went sky high. Again, that rallies, lifts something, gets bought. Jeff has a question. Melissa, how much impact do you think AI will one day have on trading moving forward? It's too soon to say, but I don't think it's going to have any other different impact than anything else that's happening the last umpteen years as far as programs in the market. So you have people that are programming computers and algorithms that are working in the market now. It's going to be very similar to that. So you're going to have that happen in the market, whether or not that ever overtakes actual human beings or trading, where you see things are moving at a faster pace, or seeming to be moving at a faster pace with certain stocks, or things that seem like, I call them machiny, where you have a lot of tails and things, where they're spiky and things. I don't know. But that would be the only effect I think it would have on it. And we are already trading things right now that have a lot of machines in them. And we're already trade stocks with tails. And we already trade things that move fast. So, I mean, it's sort of like it's not like something like you wake up one day and everything's different. It would be a gradual thing, just like automation has become a gradual thing probably over the last 35, 40 years. Do you know what I mean? Of trading. So it's not like just wake up Monday morning and everything's different. It's not going to be like that. Even once that something like that starts to affect the market, it will be gradual. And again, it's probably just going to mean that things move faster. So what does that mean? It means you're going to make money faster if you're in the right direction. It means you're going to lose money faster if you're in the wrong direction. It's probably what the effect that it would be. Like, it wouldn't be a negative effect if you know what to do. If you're in a position where you understand what to do, you're always going to be in a better position. Do you know what I'm saying? So, and as things improve in the world and the world evolves, if you're in a good position, you'll always become in a better position. The problem is if you're not in a good position and that crushes you. Do you know what I mean? Does that make any sense? So anyways, if you learn how to read the footprints of big position players before the momentum occurs, you take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader. You can win big trading on this side of power. Okay? So again, what do I mean by institutional money? Here's one we did. This is a beautiful, beautiful, beautiful short. We did in the trading room Friday. Stock closed here, gap down, open, dropped. Closed up here, snug as a bug, right around 184, gap down, boom. Open here, slightly under 175, took a while to go. Huge day trade. Came all the way down, broke 170. That was what? A short. A short. Again, more than $5 sell-off. So again, how did this happen? Institutional money dumped it. Again, why? I don't care. I don't really care, actually. I don't have time for that. I'm seeing the gap, though, and I rated it to see that it would fall. And again, getting back to what I was saying, you need conviction to make money, and you get that from understanding why. And I like, you know, I've realized this because I've been teaching people, like I said, for so long now, that I've realized how people are more averse to learning than I thought. While there are some people that want to learn and they're like sponges and they ask a lot of questions, that's great. But in general, I find a lot of people just, you know, aren't excited enough to learn. You will trade better. You will make more money. It will be easier for you. You'll be less stressed if you understand what to do. I can't stress it enough. I have an options newsletter. Anyone can join. There's no prerequisites at all for that. There is a prerequisite to actually join the room, and that's the Golden Gap class that I teach once a month. And the reason is the trades in the room just set up so quickly and so fast. You've got to learn what to do the trades. We're trading very quickly on a 1-minute chart. But again, you know, the people in the options letter would trade better if they understood what to do. And I tell people that, but, you know, sometimes people just, you know, they're not as excited about learning. So anyways, getting back to what I was saying, I use a 26-point checklist. This checklist tells me what to look for if I want to do it, how to make the pick. You think about it, you're like, oh, okay, it totally makes sense now. 1 trade a day and looking for the momentum. Shorts are easier because they go faster. Get in and out of the morning. You know, then you don't have to worry about FOMC minutes, or just think about a lot of things that I'm saying. I just gave a couple bullet points right there. Makes sense. And again, why gaps? Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I am looking for in trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward, okay? So again, there are things and times when we want to hear what the Fed is saying, and that's all well and good. But the Fed always has meetings in the afternoon, 2 o'clock. So we're usually done our day trades by them anyways. But I don't read all the earnings reports and what's happening and this and that. And you can predict, you can say, well, the Fed is going to still lower rates this year. The Fed is not going to lower rates this year. And some people say the Fed's going to raise rates this year. You don't know. You don't know. And you'll never be able to predict that in a million trillion years. So don't make decisions based on fundamentals alone. If you rate a gap and the fundamentals and what you think matches up with it, fine. If that helps your conviction, fine. If it hurts your conviction, that's a problem. Because the only thing that really matters is what's happening right now in the price for you to make money. Because again, we're doing fast trades. And even the options, they're quick. It's in the week or a week and a half or whatever. Like 2 weeks is a long trade for me. But like I was saying, institutional money is in charge of the market and stocks at all times. A big flow of money going in a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. At all times, okay? So again, it is very important, okay, that you're looking for that. Any questions here so far? How are we doing? All right, Michael's there. Is anyone else there? Michael's alive. Michael, do you have any questions? So number 1, you need a good strategy. Number 2, you need a supportive mentor. Do and follow, okay? So again, trading is about consistency. Stay on the same system. So I'm going to go over a week of trades here. These are all day trades in the room. February 3rd, we did NVIDIA. this was on, what day are we? The 3rd is here. Stock closed here, gap down, open, dropped, boom. We shorted it, got in, got out. Made $1,500. That was on February 3rd. Then we did the PayPal. This was a nice trade. I got out of this so fast too, which was really funny. Look where it kept going. So I got out of this at 80.35. Look where it went. And again, this is a day trade. You wouldn't need a margin account to do this. Again, this was the 4. Stock close here, gap down. I did the short quick in the morning, in and out, done. Boom. And I did the put and I held it longer. Again, I think it's easier to hold options than it is to hold day trades. So that was PayPal on Tuesday. Then we did AMD. I stopped in this on the 5th. Here it was, flipped me out, stock closed here, gap down, dropped, and I got stopped, lost in this. This is the 2.5, and then I did the Uber again. I did an ad in the Uber, so this ended up being a really nice trade, which I don't think I would have done if I hadn't taken a stop, but I did another trade then. I usually don't do 2 trades unless I take a stop, just so you know. Unless there's 2 things I'm neck and neck with the rating. But this closed here, gap down, open, fell. So I did the Uber here. And again, this took me around, then made money on the day from the loss from the AMD and was profitable. 9,700, that was a good trade. That was, again, February 5th. Then we did the Ford. What day am I here? No, this couldn't have been the 6th. Oh, no, I have the wrong chart. I have a mu chart. Ford. I know I have Ford in here. Sorry. I was like, this isn't right. Here, this is the Ford day. There. The 6th. I knew that something wasn't right. This closed here, gap down. We shorted it here. It was a day trade. February 6th. And actually could have done it the next day too. All right, so that was the 6th. And then we did QCOM on the 6th too. And I did this and I made a little bit. Okay. So again, one of the ones where closed here, gap down, fell a little bit. Ford was a better trade. Booked a little bit of money in the QCOM. Then on the 7th, we did Amazon, which was a really nice trade. Actually, this fell today. We didn't do this today, but we could have. Stock closed here, gap down, opened, rallied, fell. That was February 7th. That was a really nice trade, actually. The target was 230, and it almost got to 229. So 1 week of room results. This is the first week of February, 23,343. These are margin trades, okay? Trades on margin. I called in the room. You would have to have a margin account to do it. So again, if you take 1,000 shares of something, you times it by the cost of the stock. We do stock prices all over the place. So Ford was cheap. Tesla's expensive. You take what you can afford, but it's really based on your risk anyways. So even if you could afford XYZ amount in something like Tesla for the buying power, you need to be able to take that risk in your account. You know what I'm saying? You can trade prop. You can go retail. But again, this is the consistency that I'm talking about to stay on track. It's less is more. It's the focus on quality. Quality, 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 quality. Any questions here? And again, I'm calling the trades in the room. How are we doing? So, again, you get into the mindset where you're winning and you're making money. You expect it. You expect it of yourself. I expect it of myself. And people enter my room, they expect to win too. It's a mindset. If you're in a mindset where you're losing, chances are you're going to continue that negative mindset. If you're in a mindset when you're winning, chances are you're going to continue that too. This doesn't mean that every trade works. I just showed you that week we had a loser. And there's other trades that are going to lose over the course of a week or a month or a year. That's why you have risk. Set limits. That's why you put stops. But the point is, if you expect yourself to win, then you will do the right actions. And you won't go off the deep end into crazy town if you have one loss. A lot of people do that. Then they trade themselves into a big hole. taking nutty trades and crazy trades and doing things all over the place that they shouldn't be doing. You know what I mean? Anyways, we chunk it out in the live room daily. That's what we do. It's really about working smarter, not harder, by finding the best pick. So like I was saying, I prefer to short. I really do. I started shorting a long, long time ago when I first started trading, and I loved it. I'm a person that likes to trade fast, and I don't have a lot of patience, so it just works for me. So anyways, number 3, and the last thing here for today is you have to become an expert. I started talking about that at the beginning, and the focus helps you because it will help you be consistent. I think people are overwhelmed oftentimes by trying to do too many things. They never really get good at anything, and then they never really make the money that they want to make. You've got to have the focus. Again, the Seinfeld example was a great example because that was what he loved to do. He wanted to be a comedian. And when he started out, he was not successful. He was, if you look at in terms of, financial success, but he was successful in the sense that he was funny, and he just kept getting funnier and funnier and funnier, and eventually the money came. Do you know what I'm saying? This goes back to the same thing where I was saying, you do it and you stay consistent, eventually the money that you want to make will come. So again, how do I know what to trade every day? I'm always looking for the power of money. Always, always, always. Again, I prefer to short, but there could be a long. So this is another chart here. I'm just going to show you this because this is an example of power of money to the upside. We did do some trades in Netflix. We didn't do a recent trade in this. I actually could have gone long this before the weekend, but we did do some long trades in here that worked. But this is just a really, really, really nice example of a stock that the control is to the upside. Now, again, like I said, we're not anything long here, and this fell today. But this is a good example of institutional money has been buying Netflix. So, again, the only way to make money in this is to do what? To be long. You wouldn't want to short it, okay? And whether you go long or short, again, it has to do with the rating. I use the checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. That this is something you want to do or you don't want to do. It's like literally like that. You're either going to do it or you're not going to do it. It's not like, well, no, okay. And again, I have this all figured out in the morning before the open, so I'm not even second guessing myself. I don't do the trade until the market opens, and I don't do the trade till it sets up. And again, I teach the entries in the class, but I know what I want to watch. 1 or 2 things, maybe 3. It could get overwhelming if there's too many. Again, this is another example of a bearish gap where you have the control was to the downside. Control is still to the downside in this, actually. So this is lower, And one push for the market, if we gap down in the market tomorrow, this will fall off a cliff. Anyway, seeing when and where the power money positions are getting in is like finding a gold mine, okay? Seeing gaps clearly and how they're creating trends, changing trends, and making momentum is a powerful way to trade. You can use this information to enter trades yourself so you can get paid along with the power money moves. So it's very, very important to focus on that and do that. And again, if you're someone that is not very good at focusing, you might have to work at it. But I think once you start making money and you start doing it, you start seeing it, you start understanding it, that it becomes easier for you. Personally, I think it's just too overwhelming to be doing too many things at once. And again, at the end of the day, less is more for the profitability. You could just add size onto the trade to make more. That's how you do it. You don't do 55 trades. There's times to go hog wild, like I said at the beginning, and there's times not to. When do you go hog wild? You go hog wild when you've got the market direction with you and the market's power trending. And that hasn't been for quite a long time. It's been months since that. Last time the market power trended or did anything like that was after the election. Certainly not right now. Certainly hasn't been at all this year. So the time to go hog wild is when that happens. And that's not right now. So how do you make money in the market? Trade a strategy and system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. This is a system I teach in the class. This is my main class, which is 2 full days. I teach it once a month. The class is this weekend. Some of you here are signed up. Some of you are doing it. Some of you are thinking about doing it. It's once a month. You trade the gap in the direction of the gap. And when do you trade them? Early in the morning in the open when they set and trigger. You must have a structure in place in order to make any money at all consistently. It is about the consistency that many traders lack in their systems. Okay? And so again, it's very important to have that consistency. And then your P&L will also reflect that. You want to get up in the morning and you want to see your P&L grow. It's like, the idea of 10 steps forward and 2 steps back, 5 steps forward, 1 step back, 20 steps forward and 3 steps back, that kind of thing. It's not that every single day it's up, up, up. You may have a hard day one time, but it shouldn't be the end of the world, like I'm saying. And for a lot of people, sometimes it is the end of the world because they're not in a groove with what they're doing. How do I know ahead of time where stock will go? How can I call trades sometimes 6:30 in the morning? I might send out an option. I rate the gap as soon as I get up. I use a 26-point checklist. This checklist tells me what to trade and what to look for each and every day. And ideally, I want it to go the day I do it big, obviously. Ideally, I'm looking for a high probability of directional bias for the entire day. A big move, a momentum move, a fat red bar, a fat green, if I'm going long, and an early confirmation of the bias in the move between 9:30 and 10 a.m. Eastern Time. Precise entries with follow-through and a good risk-to-reward target potential. Okay. Any questions here so far? So again, if you want to do this, you put a plan of action in place. If this is something you really want to do, you're like, I do want to change my life and my structure and my schedule and my job or whatever, it just doesn't happen like that. You need to put a plan of action in place. It's like anything you want to do. It's like if you're like, okay, I want to go on a diet, or I want to start a new exercise plan, or you say, I want to move. I have to find a new city, a new town, a new home. Or you say, I want to buy a car. Maybe you can't afford the car yet. You're like, okay, I'm going to do this, I'm going to do that, or the car's going to go on sale. You need a plan. Anything you need a plan, okay? I think a lot of people trade every day and they have no plan at all. So I have every day I get up and I rate my gaps and I have a plan. It's like a mini plan. I said, today I'm going to do this or this. That's it. I'm going to do this or this. That's it. So I get the best entry every day, trying to get one. Sometimes we get more than one. And then create a money management plan for yourself to achieve your goal of becoming a professional trader. And I do think you should put a time date on it. I think, saying, well, I'm going to make this much money by the end of the year. I think there's nothing wrong with that. Again, a lot of times people are just floundering for years and years and years and years and years, back and forth, and never getting anywhere. If you have dreams, you want to get serious about your dreams, you can do it. It's real. Trading is real. The money you can make from the market is real, and you're closer than you think. If you're here and you're listening to me tonight and following me, I know what I'm doing. You can come and take the class this weekend. Now, whether you're ready or not to spend the money, that's up to you. But again, I'm here. I'm a real person. I live in New York City, and I've been doing this for a very long time. So it's just, pushing yourself sometimes over the hump, getting to the point where you want to do it. And, that's a question that only you can really answer. Like, do you really want to do it, or do you just kind of want to talk about doing it? Or do you really want to do it? You know what I mean? So sometimes people talk about things like they want to do this, they want to do that, but they're not really motivated to do it. There does take a certain level of motivation to want to do this. Why? It's time. It's an entire weekend. This weekend, it's the whole day Saturday, whole day Sunday, whole weekend. It's the money it costs to do it. You have to open up an account. You have to learn how to place the trade. You got to get up early in the morning. You got to get into the room. You got to log in on time. There's a certain level of motivation that it takes to do it to get to the next point. But it's certainly easier once you get over the hump. And then you're motivated every day and you look forward to it. And you're excited. You're like, oh my God, I made this much money today. What if I could make this much tomorrow? What if I'll make more? This is exciting. And that helps you push forward. Do you know what I mean? But you do have to take it seriously. You must be practical and professional about it. And I think that, again, over the course of the 14 years I've been teaching people, a lot of people just aren't serious enough about it. I'm a very serious person when I decide to do something. So my personality is this way. Very serious, very analytical, very professional. It's just my nature. But I think people just lose money trading for years, doing crazy things, just wanting that next big trade. And it's just chunking it out. Like I said, it's just chunk it. It's chunking it out. That's how you move somewhere and get forward. And then over time, as you're doing it and build your account, you can risk more. So how do I do it? I rate the gap. Just use a checklist. The system I use to find the right gap each day is a Golden Gap 26-point checklist. This tells you what to look for in the stock. And you can learn it all the next week, actually. I have 3 classes the next week. You can make 2025 your best year. Again, I know some of you already joined. Empower yourself today if you want to join. This is a complete system to learn how to trade. I always teach the class on the weekend, once a month. The class is this weekend, Saturday and Sunday. It's called the Golden Gap course. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. Again, I'm mostly short. If you want to sign up for the class as a standalone option, it's $69.99. Everyone pays the same, February 22nd and 23rd, 9 to 5 Eastern. Again, the class is online. And I'm doing a Winter Wonderland package. Look at those trees. I had to take that picture because those trees look like little mushrooms there. That was when we had snow. We were supposed to get snow Thursday. It's freezing here now. Now we're not getting any snow. But I'm doing a Winter Wonderland package through Friday. If you sign up for the Golden Gap course bundle, you get 3 classes, which is the Golden Gap, Saturday and Sunday, Trends class, which is Tuesday, the Options course, which is Thursday. It's $89.99. This is a great deal. You save by paying for the bundle. All the classes are online, and you will get 3 subscriptions for free through the end of the year. This ends on Friday. Again, I know some of you already signed up for this. You get the Options newsletter subscription free through 2025, the trading room, and again, you can start trading this week if you sign up, the market report, and then I'm also doing a special bonus, 2 one-hour one-on-one mentoring sessions with me, which is great. You can wait till after the class to do that. I know some of you are already trading. But this ends on Friday. Any questions from anyone about anything at all? Here's a special. How are we doing? Now, some of you signed in late. Some of you missed the beginning. Some of you were here the whole time. If you don't know how to chat, you go down to 2 individual user, and that's where you chat. Any other questions? I see some familiar faces in here. I see some new people. I see some people who are following me for a long time that haven't joined yet. I don't know. Anybody want to ask me anything while I'm here? Hello! Before I go get snuggled in for the night. Interesting market. Jeff is doing good. Looking forward to the class this weekend. Very good. Yes, I know you are, Jeff, for sure. And Tanya, too. I see Tanya. You came in late. Listen, if you're interested, email me. I have spots available. Melissa@thestockswoosh.com. Great lecture. Good class. Looking forward to this weekend. I'm going to save my voice here. I'll see some of you in the room tomorrow. If you have questions or you're interested in signing up for the bundle, it's a good deal. You get in and start trading. You're welcome. Have a great night, everyone.